Ladies and gentlemen, welcome back to the channel. AMC Stock is up about 2% today. So let's get into what's going on. We do have Fed Goolsbee that says the Fed doesn't even understand why the markets went with what they did based on the last Fed meeting, which I think is very interesting. Now, we're going to also get into the Ortex data, the Stocko Tracker data, look at the most up-to-date numbers that we have for AMC Stock, go over some things in the broader markets, what are bonds doing today, gold, the dollar, all kinds of different things. So hit that like button, subscribe to the channel, and let's go ahead and get started. So AMC Stock is up about 2% today. The great shift of capital that I've talked about continues, and I think it's going to for months to come. I don't think this is a short-term event. This is like a entirety of 2024 event, and that's what I think a lot of people are missing here. So a lot of the bears out there continue to be bearish, and really, there's no valid argument for it, in my personal opinion, unless we go into a recession, which that does not look like right now. So we do have an upward bias, I believe, for months to come. There's, $6.2 trillion in money market funds, and the entire market cap of the Russell 2000 is about $2.5 trillion. So it's not going to take that much, money out of, in the grand scope of things, to get stocks to do well, like an AMC, right? Just capital going into the Russell sends capital into AMC stock as well. So today, little bit better of a day, but you did hit a new multi-year low today. So, things are not exactly perfect out there. We did hit a low of $6.47 per share. Now let's get into what the Fed just said about this last week and what the markets are, pricing in now. Fed Goolsbee says he was confused by last week's market reaction. He said on Monday that the market may have misunderstood the central bank's intended message last week after stocks and bonds rallied sharply. The Fed voted last week to hold rates steady once again, and its updated projections showed an expectation of 3 rate cuts in 2024. That caused a rally in stocks and bonds, with the Dow Jones Industrial Average jumping to a record high. Quote, "It's not what you say or what the chair says, it's what did they hear and what did they want to hear," said Chicago Fed President Austin Goolsbee. He said on Squawk Box, "It was confusing a bit. Was the market just imputing, here's what we want them to say? We don't debate specific policies speculatively about the future. We vote on the meeting," he said. Trading in the options market implies that traders see 3.75 to 4% as the most likely range for the Fed's benchmark rate at the end of 2024, according to the CME's Fed Watch tool. That would be 6 quarter-point cuts below the current Fed funds rate, or double what was forecasted in the central bank's summary of economic projections. Goolsbee did not explicitly say that the market pricing was wrong, but did highlight this difference. Quote, "The market's expectations of the number of rate cuts is greater than what the SEP projection is," Goolsbee said. Goolsbee is not the only Fed official who has downplayed the meeting in the wake of the market rally. New York Fed President John Williams said on Squawk Box on Friday that we aren't really talking about rate cuts right now. So this interesting narrative is starting to happen with Fed officials since the last Fed meeting, that maybe we don't get 6 rate cuts, but the markets are still, just really not even taking into consideration what the Fed is saying. If we take a look at what markets are currently pricing in for Fed policy, pricing in, let's see, 2, 3, 4, 5, 6, 6 rate cuts still. Rates to be 3.75 to 4%. And this actually went up from Friday. Friday, you were at 36.3% chance, and now you're at 36.8% chance. So after Fed Goolsbee said what he said today, the odds of 6 rate cuts actually went higher for 2024, and this is with a pretty strong economy. If you start to see the economy actually weakening here, you're going to start to price in more rate cuts than that. That's where things could get really out of control. Now, we do have some economic data coming out this week, some things that could move our markets. On Friday is going to be your big day with core PCE, durable goods orders, personal income, and personal spending. But you also do get GDP data that comes out on Thursday, the final numbers for Q3. Some smaller data throughout, today, a little bit less today, Tuesday and Wednesday, and then bigger data, like I said, on Thursday and Friday. So we definitely want to be watching the data at this point and see where it starts to take us. Now, the most up-to-date AI investor sentiment survey shows the bulls are in full control. 51.3% of investors are bullish, 29.4% of investors are neutral, and 19.3% of investors are bearish. So the bulls are firmly in control. Let's take a look at the Ortex data here now. Go over the option activity here first things first. And on the day today, we're seeing volume of about 73% to the call side, 27% to the put side. Open interest of 55.67% calls, 44.33% puts. Today, so far, you have seen 3 orders totaling $127,000 for the positive order value of 43%. So what you're seeing so far, at least the start of the day today, halfway through the day or so, some pretty negative option activity for AMC, but just not a lot of option activity. Now for this next part, keep in mind, I don't think these numbers are correct, but I think you are deserved to know what the actual numbers are here. I think the real numbers are hundreds of percents of the float sold short, right? Many hundreds of millions of dollars of short positions, billions of dollars in short positions, but these are the numbers that Ortex is currently giving us, and they're very unimpressive. 8.53% short interest of free float, $140.24 million worth of short positions currently in AMC stock. You do have 1.04 days to cover, 21.09 million shares that are currently sold short. Shares out on loan, 10.09 million. Cost to borrow, 1.18%. Utilization of 22.04%, and a short score of 49.54 out of 100. Again, very unimpressive numbers that we're seeing here. If you take a look at the Stonko tracker data expiring this Friday, you do have 9,000 calls currently in the money, 65,000 calls out the money. Puts in the money at 17,000, puts out the money at 26,000. So some decent option activity here, like a 2-to-1 ratio. Again, a little bit over 2-to-1 ratio for calls compared to puts, over 2 times as many calls as puts. So there is some fuel there that could fuel an upside move in AMC. You are seeing that today, although the stock did hit a new low, a new multi-year low. Stock's going higher, at least right now. 10-year treasury yields are up about 2.5 basis points. So this is probably due to what the Fed said, Fed Goolsbee, but really hard to say exactly. If we take a look at the 10 and the 2-year yield curve inversion, it's actually inverting more. Now you're inverted 53 basis points. So for anyone that is in the recession camp, when you actually go positive on the yield curve, that's where you really want to be watching for a possible recession. Right now, as you're inverting even more, that could be seen as short-term bullish for our markets, guys. So there is that. Let's go ahead and take a look at what commodities, what other things are doing in our markets. And TLT is down about 1%. Again, 10-year treasury yields are up today, so that makes sense. USO is up about 2% today. The dollar, let's go ahead and give this a refresher. The dollar's pretty flat on the day today. You want to see this continuing to trend lower. That has been the trend recently. On Friday, though, the dollar was up almost 1%. Or maybe that was on Thursday. The dollar was up about 1%. So that was not good, but we're still trending lower. So that's okay. Gold up about 0.5%. Gold is in a solid uptrend right now. You really want to watch that one because, I mean, why is that happening? Why are people putting their money into gold? You can say because rates are going to be falling, all of this other crap. But really, at the end of the day, gold is a safe haven asset more than anything else. But AMC stock currently is up about 1.95%. Again, you did hit a multi-year low today at $6.47 per share. If the tide starts to turn and get more, bearish even from here in AMC, you're probably falling back into the $5 range. It seems like we're just getting a slow bleed down at this point, hitting, new multi-year lows and then seeing a little bounce and then hitting a new multi-year low, seeing a little bounce, hitting a new multi-year low. If you take a look at the RSI, this is actually kind of strange, showing some strong relative strength today. The RSI is actually ticking upwards, considering hitting that low. I don't know if that's the greatest thing. You're at 41.22 for your RSI. Your MACD is positive. The yellow line is above the blue line, trending to the upside, so that is a little bit of good news. I really want to see a commitment from Adam Aaron to, that he's not going to dilute shareholders for the foreseeable future. I think that's what we really need in AMC to get a larger rally going. There's just this overarching fear that we're just going to get more dilution, and that is definitely not great for AMC stock. Now, today you are seeing extremely bullish sentiment here over on StockTwits. Message volume is pretty low today. That's not great. I would rather see high volume and bearish sentiment, not vice versa, right? So definitely some things to be watching for. Again, for this week, I think it's probably going to be a slower week, but with an overall upward bias. At least a slower week until Thursday and Friday when we do get the economic data. We want to see how the economy is doing with that GDP data on Thursday, and then how the consumer is doing mostly with the Friday's data with personal spending as well as PCE. So that is going to go ahead and do it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.